Good evening, everybody. I had a delay. So, thank you so much for tuning in to another installment of Your Money Matters Financial Empowerment Show, where we seek to move the culture forward with all things money and finance. We have had a host of shows that provide resources to our audience so that you can take control of your finances and close the wealth gap, achieve your financial goals and dreams. We celebrated our year anniversary 2 weeks ago, and we want to continue to empower and share the knowledge so that we can all grow on our journey. We may not be where we want to be on our journey, but this show is designed to help you to start to put things in perspective so that you can get better with money. So tonight, I found it to be fitting. Realistically, it's tax time, right? It's tax season, and we have all kinds of new tax laws and different things going on. And I want us to be able to have that information so that we can properly plan for our income taxes, right? We work very, very hard and we expect the max on our income tax return. So I pulled a veteran. She was probably our second guest last year, because we started the show in January, and then a couple weeks later, those W-2s came out. So we had this lovely woman on the show who has over 50 years of tax experience, but I'm going to introduce her on another level, because I've known her since I was a small child. And as I grew and started working, this person has led me along my journey when it comes to taxes and things like that. So we have a long-standing relationship of her getting me the max on my income taxes. But I will let her share some things with you. But she is an amazing woman of God. She's a philanthropist. She's going to be very, very modest and shy and act like she's not the bomb.com, but she is. This woman gives and gives and gives, probably more than anybody that I know. And she is here to share her knowledge and her wisdom, that has enabled her to be a blessing to so many other people. So I'm going to bring up Miss Michelle Lovey Robinson of Lovey's Financial Services. Can you hear me?
I can hear you. Thank you for having me.
Oh, thank you for agreeing to come back. I know it's a very big labor of love, and I appreciate you for being here. How are you tonight?
I'm doing fine, and you?
I am fine, my dear. So, do me a favor, just introduce yourself. Tell us, how you got started along the journey of tax preparation. I know you have multiple businesses and things going on. Just help us to become familiar with who you are, superstar.
Well, I learned how to do taxes at the age of 16 at Chichester High School.
Mm,
They started it there and they taught us there, and I seemed to like it, and it was math. So I taught myself how to do taxes. And then as time went on, I went to school and to keep up with the laws and everything. And I enjoy helping people because majority of the people do not know about taxes. All
mm.
they know is at the end of the year, they get a return and they don't know why they get a low return or a high return or how they should fill out their W 4s. And I rather take my time to teach them, whether they come to me or not. I rather for them to know and have the knowledge for it.
Right. And one thing that I've loved about it is about your services is you do take the time to really explain things in terms that we can understand, because it could really look like mumbo jumbo when you're looking at all them lines and what you got to fill in, and you really take the time to do a strong intake form and make sure that people understand how it all works. So that's huge, and I'm sure that that's helped you to be so successful in your tax preparation. But you know, I definitely think that that's something that's important when you are working with a tax representative. Those are things that you need to make sure of. If there's a checklist, and a lot of people have been on social media how do I know if this is the right person for me to be working with? What Tell us why those things are so important.
You went out. So what was the question? Your phone, the
Did
just,
it? Oh no, that's
just a little bit.
okay. I was just saying it's very, very important to work with a tax professional who's experienced. We have those pop up. A lot of people are popping up filing taxes or doing taxes all of a sudden. Why is it important to work with a an experienced tax professional?
Because a lot of people are just doing it for the money. They're just doing taxes because somebody says they want their money. They
Mhm.
need some money, and what can you do for me? And then when they do what they can do for me, they always end up with a problem. And they don't realize what the problem is because once you sign your name on that tax return, the IRS is saying that you're responsible. And then when it comes to asking the questions, you don't know the answer. And then when you go back to the person that just did the taxes, they don't know the answer for you, or you cannot find them.
Mm.
So that's why it's important to at least to have somebody that you know you can go to.
Absolutely. I agree. So we're really going to start with the basics. I'm just going to fire some questions at you. And I know I didn't prep you, but because I already know you know the answers with all your experience. So um, tell us, how do you know if you need to file a tax return?
Anybody that makes any money over 600, as the IRS says, should file their taxes. Especially if they have federal taxes taken out, they should file their taxes. People feel that when they are seniors and they get Social Security that they don't have to file their taxes. In one form, they do not have to file their taxes. But on the other, if they receive other income, they have to file their taxes, and their tax Social Security could be taxed.
Mm,
So a lot of them says, "Oh, I'm 65, all I get is Social Security, I don't do taxes." That is true. But if you get Social Security and other income, you have to claim your Social Security, maybe have taxes taken out of your Social Security, and file your taxes. So whatever income you get, you must file your taxes.
okay, very good. Because I think some people think that they didn't make enough, or whatever the case may be. But you said $600. If you make more than $600 in a year, you need to file taxes.
Yes.
Okay, beautiful. Talk about the different filing statuses. Some people don't know what they should be filing when it comes to, and I know that getting with a tax professional helps. Just break down the different filing statuses, and I know there's several, but give us a few.
There is your single, your married filing separate, your head of household, and your married filing joint. Everybody feels that they, if they have a house or they're head of their home, but they don't have no dependents, they are not head of household. They are
Mm,
single.
gotcha.
If you are married and you make income high, you have the right to file married filing separate. Whatever is going to come out best for you. You do not have to file joint, but you can file married filing separate.
Mm.
As far as the head of household, if you are married and live in the same house, nobody can file head of household. And people think, well, I don't want him to be on my taxes or her to be on my taxes. I'm going to file head of household. No, you have to file married, filing separate if you are married joint.
How does that work with if you have dependents to claim? Do you just pick, you take one, I take one? How does
You
that
can,
work if you file
you can,
separate?
or you can take both of them. And if you do married, filing separate, you can either do the standard deduction or you can do the itemized. If you do married, filing separate, both has to itemize. Doesn't matter who has the children. They can go one and one. It's just who's going to make out with the best to get the top return.
Got you. And what is the return? Like, how does this work? Break it down for us. When we're filing taxes, what is this that we're getting back?
You're getting your federal taxes back. So whatever they take from you from your federal is what you're trying to get back, plus whatever credit is out there. But the goal is to make sure they have enough federal taxes taken out of your pay. And the way that they have changed the W 4 now, everybody is getting lower income, or they don't understand how come their income tax is coming down lower. And what God bless you. And
Thank
what's
you.
happening is they're they're filing their W-4, but the IRS or your employer is only taking out a minimum. So now that you're getting more money in your paycheck because they feel the economy needs more money in their paycheck than
Hmm.
having it at the end of the year. So if they have the right taxes taken out, they can get their federal taxes back. But if not, then they are going to owe or get a low income return.
So it's important to know that you may not be getting back as much as you've gotten back in the past. So
That
don't
is
look at your
correct.
tax professional like they're crazy. They have changed some laws to put more money in your check instead of
Mhm.
giving it back to you at the end of the year.
Correct.
Perfect. Okay. So, um, break down dependents. What are the age groups to be able to claim a dependent?
You can claim a dependent as long as they don't have income. You can claim a dependent up to 65 years old. They do not
Mm.
necessarily have to be a child. They can be your parent as long as they don't make a certain amount of money. And I believe it's they go up every year. I believe it's like $4,050. So if anybody's in your household that does not make over $4,050, you can claim them as a dependent, regardless of what their age is.
Gotcha.
As far as when they look at their children, as they can claim their dependents up to they 24 years old, if they're in school, they will get an earned income credit for that child. But if
Oh,
the child is out of school and not working, you still can claim that dependent.
okay. That's so important to know with these kids that are getting ready to go to college of mine, up until the age of 24, as long as they're in school.
Yes,
Okay. Or if they're not in school, but they don't have an income.
exactly.
Okay. All right. Very, very good.
And then
How?
if they're working, which the kids too, if they're working and the parent claims the child can still file their taxes. If
Hmm.
they're in school, they can make as much money as they want to. The parent can claim them, but if a child's doing their taxes, they have to put down that they are being claimed by a parent, and
Mm.
that does not mess up the parents either.
Well, that is very good to know. Can you hear me?
I can hear you.
Okay, I thought I went out again. Okay.
Just a little.
So, yeah, I don't know, my something's crazy going on with my Wi-Fi. But that is definitely good to know. Because I thought that they could only make a certain amount of money if they were in school, but you're saying it doesn't matter what they make as long as they're still attending school, they can still be claimed
That
no
is correct.
matter what they make. Super, super, super. Okay, how do I know what my tax bracket is or what my tax rates are?
Well, the goal is once you have your gross income put in, and then you take your standard deductions. It's a whole, but it's a formula that you got to go through. If
Mm-hmm.
your standard deductions is taken away from your wages, your children are taken away from your wages to get
Mm-hmm.
your taxable money down, so that you don't have to pay taxes. So if you made $50,000, that means you're going to pay taxes on 50,000. Your goal is to drop down that 50,000 so you have to pay less taxes. So that's where your standard deductions come from. That's where your itemized come in, and that's where your children comes in. And that's when you find out what your tax bracket is of your adjusted gross income.
Perfect. So if I make over $50,000, does it affect how much money I get back?
Yes, because your federal falls in there. Your federal taxes fall in that category. So if you made 50,000 and you had dependents, you're not going to get no earned income credits for your children. So you have to depend on that federal taxes being taken out correctly so that you don't end up owing.
Good to know. Major keys, major major keys. Um, should I take standard deductions or should I itemize? Who should itemize?
Well, now that has the IRS has raised that. So it's really hard. So if you are a head of household now, you have to come up with over $20,800 to itemize.
Mm,
So, are your house would be your interest, your taxes, your charitable contributions. Those would be your itemized. So if you do not come up with over 20,800, you don't itemize. And that's what they're doing. They're cutting the itemized down and raising the standard deduction. So unless you live in a $300,000 home, your interest is going to be high. So naturally, you're going to be able to itemize because your taxes are going to be high. But other than that, the standard deduction is really the way to go. How the government has it now.
Got you. What if I am a business owner? Does that change?
Depends on what type of business. If you're a sole proprietor, you need to send your estimated taxes up quarterly. So as long as you send your quarterly taxes up, you're safe. When you don't and you are making a profit, you can get jammed. A lot of people wants to take losses every year, and they fail to realize when they want to buy a car or buy a house, with them taking a loss, they're not going to get it. So whether they make $100,000, if you net down to 15,000 profit or taking a loss, they're not going to give you anything because they're going to say you're not making any money. So the best
Mm,
way is to send your estimated taxes, pay the taxes, and pay your net as a good gross so that you can get that car and house.
got you. What if you're an independent contractor?
That works the same way. Independent
Okay,
contractors are self-employed. They get a 1099 miscellaneous. It goes on a Schedule C, and they treat it like a business.
got you. Okay. All right. Very, very good to know. I had somebody write in and ask me, how does it work if are you able to claim your casino wins and casino losses?
Yes, you can only claim the losses if you win. So when they get your Social Security number and you know made 1,000 or $5,000, you can claim your losses up to your winnings.
Got you.
So if you win 5,000, you can claim your losses up to 5,000.
Good to know. Okay. So I hope that person is listening. There's someone that frequents. So all right. Um, what is the difference between the tax credit and the tax deduction? Which one is better for someone to file?
Well, everybody's like the new law is everybody's waiting for this child tax credit that's coming out. Everybody's not going to get it. Why the IRS put it in the middle of tax season saying that we're going to give everybody this new child tax credit. Everybody's calling waiting for it. Everybody's not getting it because it depends on your income.
Uh oh.
So we're getting calls now, and it's like if you made $10,000, 9 times out of 10, you're not going to get it, regardless of how many children you have. But if they approve it, the child tax credit just takes away from you paying taxes. It's not
Mm,
really money that you get. The ideal is to knock your adjusted gross down to zero. So if you get the child tax credit, it's taking away from your gross, just like the standard deductions and
mm-hmm.
everything. And then your other credit, which they don't have any credits out now, only for the children. So since COVID, there's no more credits out there. So it's up
Mm,
to
okay.
nothing out there for you anymore.
Wow. Okay. So with that is definitely something that we need to know. Um, and I know you're probably getting a lot of calls about that.
Yes.
Okay. What give us some examples, and you did give a couple, but give us some examples of what are some of the deductions and credits that you can claim. I know you said the child tax credit is one that has, kind of been diminished. But what are some other things that we can claim as deductions?
There's really nothing.
No?
There's really nothing unless you have a business.
Mm-hmm.
If you have a business, then you can take all the deductions and all the expenses of the business. But on a regular taxes, unless you get a IRA and contribute to your IRAs, that can help. But other than that, there's nothing out there that can help you but your
What
federal.
about the student loan interest? None of that stuff?
Student loan interest gives you a little. They don't give you much. They don't give you much. If you have student loan interest, you claim it, you tax it, and it could be a little credit. but it all depends on your money and the amount of the student loan interest. Naturally, if you're in school and in college, you got the college tuition, you
Okay.
got your lifetime and your American, so that's still there, and
Okay.
that's pretty much it.
Okay.
I mean,
So,
and now they do have some with the solar windows. I mean, the roofing. They still have some emergency credits out there, but not much.
okay. Is there still a first time home buyer's credit?
No, there's
Dang.
no first time home buyers credit. But if they take money from their pension, they give you a $10,000 deduction off of that for first time home buyers.
Really?
So if you got to take the money from your retirement, there is a credit out there. Well, not a credit, but you don't have to get taxed on all of that.
Okay. Got you. Can you talk about, since you mentioned pensions and things like that? How does that work at the end of the year when you go to file your taxes? If you withdrawn any money from your, say, your 401k or your IRA for emergencies or anything like that, how does that work?
Well, they give you a 1099, or if you are under the age, you're going to get penalized. You're going to get penalized for the taxes and penalized for taking it out early. If for some reason that you take out your pension for school, health, paying taxes, you can waive the penalty of that. Other than that, you are going to be penalized, which is usually 30%.
Okay.
When you ask to have your taxes taken out, they're only going to do 20%, or they might do 10%, and then
Hmm.
you'll get jammed and you're going to have to owe. 9 times out of 10, you end up owing because the taxes are not taken out right.
And that age is what, 59 and a half?
59, and it depends on where you work at, because each one has a different age of their retirement.
Got
Some
you.
is 59 and a half, some is 62, some is 65. So it does depend on their job.
This is why you need to get with a tax professional. Honestly, there are so many things and so many stuff that I wasn't even aware of. And like you said, you really can get jammed up if you don't know these things. Okay. When what's the tax deadlines? Like when is it is due every year? When is the cutoff?
April the 15th, unless it comes on a holiday, and they might do it the 17th, or if it's a weekend. But generally, it's April the 15th.
When do I get a penalty? After April 15th? Is it if I made a certain amount, or how
You
does
get
that
a
work?
penalty if you owe. If you do
Gotcha.
not owe, you have 3 years to file your taxes without any penalty. But if you do owe, the penalty starts on the 16th of April.
Okay. Okay, good to know. So, that I realized that there was with the I ended up owing a little bit, right? And I actually asked you this question, but I think it's important for other people to know who may have owed their like money to the state or something like that. How do they go about paying the bill? Do they pay the IRS directly, or does it come out of their next tax return? How does that work if they
It
have
can go
a
either way. They'll send you a bill. You can either make payment arrangements, or if you do not pay it, if you get a return the next year, they will take it from there.
okay. Good to know. All little tidbits. I'm learning. Um, when I'm filing a tax return, tell me the things that I need to bring to you when I'm getting ready to file.
We need all your W-2s, all your wages, all your income that you have made.
Oh,
We
the
need
dog's going
IDs. We need your IDs. We need the children's you on the phone?
Pedal the dog
Okay,
out.
sorry about that. Okay, you need
No,
your
that's me.
IDs,
The dog was going crazy. I let him out.
your birth certificates, social security cards of your dependents. We'd like to see if you have any kind of health insurance. We still collect that. And that's pretty much it.
Okay. All right. Very good. All important things to know. And how does the refund work? Do I know some people file electronically, some people don't. What's the turnaround time for you if you file electronically?
They tell us to tell them 14 to 21 days.
Mm-hmm.
They are holding earned income credits. So those that are getting earned income credits and they filed electronic now, they might get it back in 2 weeks or they might not get it back until 4 weeks because they are investigating people with these dependents to make sure that they are their dependents. So usually, generally within 2 to 3 weeks, you should get it back.
Okay. What if I just mail it in?
You're talking about 7 to 10 weeks and hope it don't get lost in the mail.
Lord. Okay. Uh, how can I stay up to date with all of these changes?
It's very hard. I go to school every year. Every year, it's hard. It's hard. You really have to keep up. Every rule changes for everybody. Nothing's is the same for one person that it is for the other. So it's very hard to keep up with that.
Gotcha. Another question that was asked, am I able to deduct medical expenses?
On your itemization, again, if you come up over what the standard deduction is, yes, you can claim your medical.
So that 20,000
That's
if
20,000 for the head of household. Single is 13,850. So they take up 80% of the medical and add it with your interest and your taxes and charitable contributions. But yes, they can.
perfect. Um how can I, again, I think you mentioned this, but you're saying the best way to reduce your tax bill. What do I do? What do I focus on to reduce my tax bill to get it down where I don't owe?
Again, I stress with the federal, the W 4, when you fill out the W 4, they changed it this year or last year, is single, head of household, and married joint. And I tell everybody to do single, do not do head of household. You do single, you don't claim your children through the year,
Mhm.
and you pick up zero. And you might have to do that extra withholding so they at least can take 10% out of your wages so that you can have some money there. But if you can't afford that, you have to do what you have to do. And then you just be happy of whatever your return is going to be at the end of the year. Because every household is different. You might need all your money during the year, but you don't want to end up owing the IRS.
Absolutely. What is the cutoff? Um, say somebody I know had a baby, because not me. But if somebody had a baby in December, are they able to claim their child as
Yes,
a dependent
yes. The same if so,
for the whole year, or is it only for
yes,
a
for the
period?
whole year. And it's the same if somebody, Lord forbid, if their child dies and within that year, as long
Mhm.
as they have a social security number, they don't went through all that, they still can claim the death of their child too.
Okay, good to know. Is money received from the sale of inherited property considered taxable income?
It is inheritance taxes that you have to do, which is another form of from the IRS. So there is inheritance taxes that you do have to pay, whatever you inherit.
Okay, okay. I know some people that, had grandparents that passed away and they inherited the house and things of that nature. What's the difference between the W-2 and the 1099 miscellaneous?
W-2, they take your taxes out, they take your social security, and they take your Medicare, your state, and your local taxes. Your 1099s, you're on your own. But whatever you pay, you're paying into your social security. So if you make a profit, you're paying into your social security, you're paying your SC tax. So that all builds up by the time you become 65. That is considered income and not a loss.
Okay. Yeah, look at this. Um, so and the 1099 miscellaneous, is that more for business owners?
That's your subcontractors
Okay.
and your businesses, yes.
Okie dokie. Okay. What else would you want us to know when filing taxes? Because I know everything has just gotten extra crazy and extra weird. They're constantly changing things. What else would you want us to know when filing our 2023 taxes?
Well, I think you hit everything, but I am concerned for everybody to watch out for their Keystone taxes, which is their Chester or wherever they live at, because Keystone is coming after the people. They're waging, they're taxing, garnishing their payroll. Nobody knows why. All the city needs money, especially Chester, and they're coming after them from back from 2015 on. So it's very important that you are having your 3.75 local taxes taken out, because this has been a problem for the past couple of years and they have been garnishing people's wages. So I stress, look on there, make sure they are taking some type of a local taxes out. Chester is the highest one besides Philadelphia.
Mm-hmm.
So what's happening is some of the company might be taking out only 1% where you work at and not where you live at. So when you do your Keystone taxes, you're going to end up owing. So you must make sure that they're taking 3.75 out.
I did hear that. I was listening to a talk radio show, and that is exactly what the person said. What if you don't live in Pennsylvania? We have a lot of listeners from all over the country. Is it the same for them?
Delaware do not have local taxes unless they work in the Wilmington. Each state has their own different thing, but Keystone is more around this Delaware County. I don't know all the states on how they do their local. Philadelphia, pretty much, if you work and live in Philadelphia, they take out exactly like what they're supposed to take out. It's Delaware County that's messing up people.
Got you. So if I live in Jersey, I should file. I should make sure that if I live in Jersey but I work in Philly, I should make sure that that city wage tax is being taken out. And should I file in the state of Jersey or should I file in the state that I work in?
Well, what's going to happen is when we put your information in, it's going to tell us whether it's Philadelphia or Jersey. So
Okay.
we'll know. Some states and some cities will take out your taxes where you live at. So you'll just have to do Jersey. And then if you
Okay.
live in Jersey with Philadelphia, then we'll do a Philadelphia tax.
Okay. All right. Is there anything else that I should know? I feel like I gotta pull that out of you because you were about to not tell us that about this Keystone
I was
tax.
I was ready
Um,
for you to ask me, and I had it ready to let everybody know about the Keystone because that's the biggest problem. I mean, people are coming in and they owe thousands and thousands of dollars because of their jobs not taking out the taxes. And it's been going
mm,
on for years, but now because they need money, they are digging in to see who has not paid their local taxes.
that is absolutely crazy. And I know some people come in there cussing and fussing, not because they're not aware, right?
Yes.
Anything else we need to know, Miss Lovey?
I'm I'm stressing that they just started sending out letters for these PPPs that people was getting during COVID,
Mm.
and they are investigating because a lot of them have not filed taxes under that PP. Just to let you know, they're coming for you. They want their money back.
And I
So
heard they hired some extra staff to
exactly,
make sure that they get
exactly,
it. So
exactly.
if
So
you were fraudulent with your
exactly.
activities, I would strongly suggest, and we know that a lot of people did commit PPP loan fraud. If you are fraudulent, they are coming for you. I hope you didn't use your personal address.
File
Because
your taxes.
they
Just
might
do
be
it
showing up
amended
at
and
your
file the
door.
taxes.
Yes, indeed. Miss Lovey, you just shared so much knowledge in a short period of time. This is always such a quick hit show because everything is pretty much question and answer, factual, and you're pulling things straight from the tax codes and laws and things that you have to be updated on yearly. Tell the people how they can get a hold of you.
I am located at 3013 West Ninth Street in Chester. I'm in the phone book. I'm under Lovey's Financial. Our phone number is 610 497 4258. You can email us your taxes from anywhere. We do them from here to California. You can send it to taxlove@comcast.net, taxlove@comcast.net.
Okay. And what are your hours of operation?
We're from Monday through Saturday, 10 o'clock to whenever the last person leave, 8 o'clock, 9 o'clock. We try to stay to get a hold of everybody, but we do start at 10. You can call us and ask us how long we're going to be there. We don't generally take appointments. I try to get you in and out, but you can call and we can let you know.
Okay. I don't know if I would have mentioned that till 9 o'clock thing, but
I'll shut the door.
that's another topic for another
And
day.
we're open all year long. Anyway, we're there all year long, even if it's one day a week, just so that we can help anybody that gets a problem with the IRS or whoever did your taxes before and you need some help. We're there to help you to assist you. And especially watch out for your ID me's. And that's what the IRS wants a lot of too, is your ID me, especially if you have never filed taxes before.
Come on, Miss Lovey. See you holding out again. Talk about the ID me.
The ID means if you get your taxes done and the IRS is saying that you need to verify your identity, even before, go on to idme.gov. They're going to ask you for your social security number, an email, and your phone. They might do a video call of you, of your face, but it's best to have this ID me done. We do it at the office for a fee. It takes a while, it takes a long time, or you can go ahead and do it yourself. But ID me is going to be one of these things that they're going to use for identity. And whatever your address is and your phone is, keep that phone number because once you're on there, that's the phone number they're going to use. So if you change your phone number, you got to go through a whole other procedure. But
And
ID me is there.
ID me is not just for Texas. They're using
Now,
it for other things as
everything.
well. So
Yes.
you got another tracking situation, and I know that in the past they didn't release my tax return because they requested an ID me and I didn't know it, but I did have one set up. I just didn't know
Hmm.
that was what they were trying to do before they released my refund. So I didn't even think about ID me, but I'm so glad that you brought that up. That is a major key. I did receive a pin this year.
Yes.
They sent me a pin for identity purposes when it comes to filing taxes. So either or, but that's those are some helpful tips that you need to know about. And I guess this is like I don't want to say altar call, but is there anything else we need to know?
From me.
Yeah, from you.
I'm glad you mentioned the PIN. Once you get a PIN, the IRS is going to send that every year. Please keep that letter because it's hard to get the PIN unless you have an ID me. So those PINs you definitely need to keep. And then we have a lot of people of children being claimed. You can even get a PIN for your child so that nobody else can claim your child.
Lord, I need that pen for my child. But needless to say, I won't get into my personal business. But ultimately, you have been just chocked full of information. And you can continue. You can consider this an annual spot as long as this show is in existence. Because, like I said, there are a lot of people popping up doing these taxes, but you need someone who is knowledge, who has the knowledge and can know the ins and outs. A lot of people are doing their own taxes and things like that. And, I don't knock it, but you need to have especially if you have a business. I wouldn't dare file taxes on my own if I had a business. Well, I do have a business and I don't even bother because there's too many different things that I need to report and I don't want to mess it up and I get
Mhm.
easily overwhelmed by technology sometimes, so that doesn't work for me. So I would strongly suggest, if not Miss Lovey, get with a licensed tax professional. Years of experience does matter. You might want to ask, how many years they've been in business, just different things like that, so that you make sure that you are meeting with someone that's reputable and not somebody that's going to put you in a position to have to owe because they've messed up something or didn't fill something in right or whatever the case may be. So as a podcast host, I can't thank you enough for coming on here and sharing your wisdom and knowledge with us. As someone who knows you personally, I love you so much, and I am so thankful that you don't tell me no. You might complain a lot because you don't necessarily like to be on camera, but the fact that you don't tell me no and you get people to listen in and support this mission, I really, really, really appreciate you. So
Thank
thank you
you.
for
Thank
that.
you for having me. Thank you for having me.
My
I'm not going to
pleasure.
say
So
any
this
time.
Yes, you are. Yes, you are. You don't say no. You never say no. You might fuss, but you don't say no. So, this concludes this episode of Your Money Matters Financial Empowerment Show. I pray that you got some really, really great tools and tips so that you can make sure that you're doing the right things when it comes to your tax return and you're not cussing and fussing because they've changed all of these rules and laws. But continue to plug in. We are looking for sponsors for the show. So we ask that if you are a business and you would like to have a small spot on the show where you can come on as much as you want and promote your business, we are looking for sponsorships. So I would strongly encourage you, if you believe in this mission that we are trying to accomplish here, of just providing the resources and information that people need. It needs to be free, right? It's too many people out here charging for information, and it puts us it sets us back, right? Because if we had the money to pay for all of these things, we probably would be a lot further along when it came to our finances. So we continue to provide free resources and tips and tools. And if you believe in this mission and you want to support it, please contact me. We are looking for sponsorships. We are also launching our own YouTube channel. We are on the station's YouTube channel, but I want to make it so that people have access to these episodes a lot easier and faster. So stay tuned for Your Money Matters Financial Empowerment Show YouTube channel. And I bid you all a good night. Thank you again, Miss Lovey. Talk
You're
to you
welcome.
later.
Have a good evening.
You too. Good night.
Good night.
CMPRadio.net, it's the station. Listen, man, let's cultivate together. Bring us all your show ideas. Content creators, we're looking for that. Videographers, we're looking for that. You can be a part of the next great big thing that takes place right here in Chester, Pennsylvania. Let's cultivate.